Hello and welcome to my first performance review on this channel. For those who may not know about me and what I'm doing, I'm building a quantitative hedge fund from scratch. Essentially, I run a podcast where I go through the ups and downs of doing so on a day-to-day basis, and I release podcasts at least once a month, and I'm definitely going to get more involved as we do more of these performance reviews. So to catch you guys up, I produced some algorithms for testing purposes, and I put them live on my site, which you can see here under the live trading tab. But before we go there, I just want to tell you a little bit about myself. I developed some trading algorithms. I had some success in 2020. I decided to take them a little bit more seriously in 2021. I had 71% return roughly across my accounts, and I decided, why not take this even further? And so that's what you are now walking in on. You're walking in on me trying to develop a quantitative hedge fund and figuring out which algorithms to use and which funding routes to use for different reasons. I go into that, detail with that a little bit more on my podcast. So I do welcome, would tell you to listen to the podcast to learn a little bit more about the story. But without further ado, let's go into the live trading. So again, as I said, I built these algorithms for a specific purpose. And the specific purpose is to pass prop firm challenges. Now, because of that, they have some constraints that are very, very new, and I don't really use in my main portfolio. Some of these constraints are closing by Friday. They have very, very short term trades, and most of these algorithms were built to be what I call mean reverting algorithms. So on my website, I have them listed as live trades or live under the live trading tab. And here are the 17 algorithms that I've decided to move forward with. And so what you're seeing here is the back-tested performance in 2021. Most of these were built off of very, very simple indicators of Bollinger Bands, RSIs, stochastics, but essentially me using my intuition of the markets to say, when can I mean revert and how could I mean revert? And essentially all I did was build a portfolio of these algorithms. This is very new to me because I typically trend follow and I make most of my money from trend following, but I decided I wanted to try this short-term approach to make algorithms that can pass prop firm challenges. And so there are 17 here shown, and this is their 2021 performance. And again, this is not them back tested and we just picked the winners here. These were built off of 10 years of data, roughly 10 years of data, and they never saw 2021 data as well. And so this is their performance when they see 2021 data, which I thought was pretty good, especially for mean reverting type systems. Now let's go into what I did for 2022 and so far. So in 2022, I decided I'll put them all together into one portfolio and just let them run. And I decided, why not let you guys see their performance? And so I put them all together on one demo account, gave them $100,000 paper money, demo money, and connected an FX Blue account to it. Now, I suggest everyone use FX Blue for tracking. I'm not paid by FX Blue to say this, but I use FX Blue for my tracking of my trades, and I have been using them for over 3 years now. And essentially it's just, tracking your trades is a free way to track your trades. And especially if you're doing algorithmic trading, for me, I don't really pay attention to every trade these algorithms take. I just look at them every week or 2 weeks, etc. And for this account, this is going to be my first time actually going deep into the trades in the 72 days it's been trading. So yeah, use FX Blue. Is very simple, very easy, and it's free. Why not, right? So anyway, if you go to the website, you could go to this page and you'll see these charts, right? These update as my algorithms take trades. Now, again, I'm a pretty busy PhD student, and so I'm not really paying attention to what they're doing. And so this is going to be my first time looking at them in a little bit more detail as well. Another caution is these are unoptimized. Okay, I know a lot of people love optimization, and as a engineer at a PhD level, optimization is a very, very slippery slope, and I tend to not optimize. So this is very, unoptimized algorithms and an unoptimized portfolio. And so you will see that they're down, I believe, around 2% right now. But ideally, you wouldn't put all of them together anyway. They may have some high correlation. Anyway, let's continue on. So we see the numbers here, the name, so that given a numbered alphanumeric, as you would say, an alphanumeric name. So it's BDA 100 through 117, and those numbers correspond to their magic number. And so you can see here what their performance is per magic number. So let's look at 100. So we'll immediately see that our friend 100 is decided it's going to sink the ship for us. But in 2021, it was performing pretty well, right? 2021, it took 156 trades, 92% win rate. So, I mean, I would have put that on, looking at the 2021 performance. But immediately it decided, nope, I'm going to be down $1,600. So, a lot of fun here. But I also think that this is a good opportunity for you to see transparently how algorithms are developed, or at least should be developed, and the behind the scenes. This is why you also can't blindly trust an algorithm that someone is trying to sell you, because look at 2021's performance for this BDA 100, right? He took 156 trades, 92% win rate, and a net profit of around $700. Now, these were all given the same position sizes or fixed lot sizes, and so in some ways this is comparable, the net profit. So in some ways you could compare them on a $10,000 account on each of them. But regardless, this had good performance in the previous year, but immediately in 2022 it took away all of those profits and more. And so this is just another thing that you need to be cautious of if you're trying to just purchase algorithms from somebody, because they may hide this information from you. Regardless, let's continue on, and I think I'm going to go over to the FX Blue account. And so if you are on the website, you could go to this chart, so you'll see it's updating, and if you click the chart, it'll take you to the actual FX Blue account. And the actual FX Blue account is going to give you all the analysis and all the more detailed information. So let's look at the account in a little bit more detail. We'll see that we're down 2.2% on the year. That's not that bad, but obviously it's not that good. We do want to be making 100,000% a day according to social media, but we will, slow and steady wins the race. We'll get there. Weekly drawdown, everything's in the red, but the win percentage is very high, 73%. So as a trend follower, this is very interesting to me, because typically trend following algorithms have terrible win rates. I mean, in the 30s, 40s, and 50s. And so it's very exciting to finally see a high win rate, because if you're a trend follower, and if you have a trend following algorithm, you know what I'm talking about. Someday you may be up with a lot of open equity, but then that trend reverses, and then you have to deal with just eating that. And if you talk to or listen to a lot of the turtle traders, or more specifically the Top Traders Unplugged podcast, they're all trend followers, and they talk about how difficult it is to stick with trend following because the win percentage is so low. Now, all of that being said, the win percentage is low on trend following systems, but the average win rate, or average win, of trend following systems is typically 3-1 or 4-1. So it's typically the opposite, where you lose small amounts but you win a very large amount. And in this portfolio, you could see the artifacts of mean reversion, where you're winning pretty low amounts. So your average win in this regard is 129, whatever that is, and your average loss is 410. So your average loss is roughly four times your average win. And essentially, this is a recipe for disaster, especially if you have a portfolio that is specifically this, right? If all your portfolio is this, you are in for trouble, where you need to, essentially you're going to have to maintain a win rate, maybe even of 95%, to maintain something that's profitable. Because if every time you lose 4 of your trades, you remove the wins of 4 of your trades, you're going to see that this is going to be an issue for a portfolio and its stability. But regardless, that's not what we're here for. So let's get back on track. You can see that this portfolio is trading a lot of different pairs, primarily because the algorithms that I develop, and I guess I'll do a video on this eventually, but the way I develop the algorithms is I may develop it on a Euro USD pair, and then I test it on the entire 28, I guess, quote unquote, 28 major crosses. If they perform well on the 28 major crosses, then I most likely would pick randomly one of them, one of those currencies to put the algorithm on. Now, I do that because I want to avoid overfitting. I also do that because I don't want to essentially just select the winners and select the best ones. In machine learning, there's a theory called probabilistic outcomes, where you essentially are hoping that this is probably acceptable. It's not an accurate thing, but that's the approach I'm taking here. It's that if I develop an algorithm, it's doing generally well on the majority of currency pairs, it is picking up something, and I'm going to put it on anything essentially because I expect my algorithm to be robust, hence the large number of currency pairs. So in some ways you could look at this and say, okay, well, maybe you have some correlation here, but I'm not talking about portfolio construction. I'm really here to look at the algorithms individually. So now let's look at some stats. So if you go again, if you're on the page, you could click here, go to stats, and you'll get all of the stats since this inception of this account. So yeah, you could see that it started with $100,000 fake money, no withdrawals of that fake money, and essentially we're down net 2%. And you have some more stats, but really what I want to get to is this. So if we go back to our page here, again, this table is equivalent to this table, meaning this is just the algorithm's performance in 2021, and then this is their performance in 2022. And so now I'm going to click one of these column headers here, and we're just going to sort by net profit. So if you sort by net profit, you quickly see that our friend, the 100 algorithm, has not been performing pretty well, to say the least. So it's down, essentially, it has brought the account down by itself 1.6%. And it's taken 20 trades in the 76 days this account has been active. Now, you may say that's a lot of trades, but if you look at the trades it took in 2021, it took 156 trades. So, roughly, this is a very active algorithm. If it's taking that many trades, and we only have so many days in a trading calendar, so that's taking a lot of trades, almost a trade every day. And so if this took 20 trades, that's well in line with the number of trades that this algorithm would take. It's just that this algorithm is terrible when it does take trades. It's 2022 has not been its year. Moving back to this sorted by net profit, and you'll see down the line you have negative 1%, essentially negative 0.6%, and I'm talking about it in the drawdown perspective. And the reason here is you want to essentially determine, is this drawdown normal for this algorithm, and has this algorithm seen this type of drawdown before? So if we look at this, going back to the 100 example, so negative 1.6, right? And we go back to our website, in all of 2021, it only had a negative 1.36. It had a negative 1.36 max drawdown. So already we see that within 3 months of it in 2022, we have surpassed the max drawdown of this algorithm. So maybe you want to look at this algorithm to say, okay, well, maybe we'll tailor it down, we'll reduce its position size. We have to do some cross-correcting measures because it has surpassed its max drawdown. Now, the next step, if you really want to do analysis, is you have to go and determine what is the max drawdown that this algorithm has had in its test period. So maybe in the last 10 years, last 15 years, and is this max drawdown sufficient, or is it something we should be worried about? I'm gonna suspect that within 20 years, an algorithm would have more than 1% or 1.5% drawdown. So I wouldn't be too worried about it. But again, it's just something that you should pay attention to. I'm just gonna skip through to the good parts. And I think what we should see here is there's a trend of a lot of algorithms not performing well, but generally they are not. They're not sinking the ship. They're not all sinking the ship like the 100th algorithm is. They just aren't making any money. And from that perspective, it's not that it's not that good. It's not making any money. But also, if we go back to the website, we can see some of these algorithms only traded 24 times in a year. 18 times in a year. So some of these algorithms just aren't as active, and they may not have caught that many opportunities yet. It is only 3 years, and so I'm sorry, 3 years. It's only 3 months within the year has passed, and so it's really too early to tell, right? To tell if these algorithms are performing as you expect. But regardless, you need to pay attention to these things as they develop. I would say that this is my first real foray into developing mean reverting algorithms this intensely, and I'm not too concerned about the results here, because mean reverting is very difficult to do, very difficult to get right, and I believe that these algorithms, they're gonna pull themselves together. Within a year, we'll see if they do pull themselves together. I'm not really expecting them to make 100% within a day or within a week, and so I'm pretty fine with their performance right now. However, I am interested in making a more optimized portfolio of them to see how they would work with trend following systems, and if you could buffer out some of their drawdowns. Let's just end on a positive note here, because again, if you want to go through all this information, you can on the website, going from the website from live trading to the chart here, and you can click this and it'll take you to the FX Blue account. But let's end on a positive note where we have some interesting winners. There has been one algorithm that has traded 4 times this year and has not lost. That's cool. That's very interesting. I've never seen that before. Another one has traded at least once and have not lost. Another interesting one is this algorithm that traded 12 times so far with a 92% win rate. And so 111, let's go to his 2021 performance. So in 2021, we can see that he had an 86% win rate. Oh, he or she had an 86% win rate. And it looks like it's on par or on track to do just that. Now, it's interesting also that this had a high win rate with a lot of trades. So, I mean, if you want to be a gambler, you would take this algorithm and you would max it out. And you would max it out because the win rate is pretty high. It takes a lot of trades. That's really bizarre, very interesting. It takes a lot of trades, relatively, and it is relatively accurate. So, you would want to pay more attention to that. Now, in the coming days or weeks, I will be uploading all of these algorithms, all of them, to my Patreon, essentially because I made these so that we could see how mean reverting algorithms work. And when I was developing algorithms, and as I still am developing algorithms, people just aren't that transparent with what they're doing and with why they're doing it and things like that. And as I said before, I'm an engineer, but this isn't something I'm trying to gatekeep. I believe that anyone could, just take an algorithm like this, put it on, and let it go on autopilot, make some money. And if you do, good on you. But I feel like just some people on the internet decide that they want to gatekeep information. But I'm also interested in finding out some truths here. Like why did this algorithm trade 12 times with a 92% win rate? I don't know anybody who could do that. And I would really be interested to look into him a little bit more. Him or her, this algorithm a little bit more. But the information is all on the site. on my website here. You could go through it yourself. You could check it out, and you could determine which algorithms suck, which one don't. But if we look at our equity, so you can see our equity chart. We're gonna end here pretty soon. But if you look at our equity chart, we started the algorithm portfolio, and immediately, Russia decided to declare war, all this stuff, and so it, mean reverting is not pretty good in those events. And I know that historically, from the things I read or have read, and the testing I've done, mean reverting is not what you want to do during large market shocks. And it seems that may have happened and affected us in the first part of January to February. Or maybe it was something else, but it was some market change that caused that. And then you see that we kind of stabilized, went into a pattern of mean reverting itself, and now we're slowly breaking out to the upside and closing that gap of break even. So, this is a learning experience for me to get. This is an entire portfolio of mean reverting algorithms, right? You don't want to do this, and essentially you've just magnified the pros and the cons of mean reverting algorithms. Now, the pro is this, right? This final ending here of the last 2 weeks, you're going to have a really, really steep curve as these mean reverting algorithms all get, aligned with the market. Now, does that mean that this is going to continue? Who knows? Does it mean that it's going to flatline and go even lower? Who knows as well, right? But this is all an experiment. And again, as I said, if you want to look at this information yourself, go through all the charts. Just treat this data like your data, right? Treat it like yours. You go through it, you can analyze it, you can ask me questions, you could become a Patreon, and you could get these algorithms, these very bizarre algorithms from a collection of very traditional indicators, and see how well you could do. And maybe you even optimize these algorithms, because again, I have not optimized these, and maybe you could get much better performance than I am getting. And if you do, kudos to you, and let's talk about it. So I want to thank you for watching. Thank you for tuning in. I do encourage you to go to my website, check it out. As I said, I'm trying to build a quantitative hedge fund from scratch. I have no industry connections. I'm doing a whole podcast about it. I'm writing blogs. I'm an active researcher, engineer. I have a Patreon that you can check out. I have some downloads here. I gave away my first algorithm, the source code as well. And, I'm pretty generous with my algorithms. And yeah, I look forward to hearing from you guys. I look forward to having a nice discussion about these algorithms and more people becoming Patreons, and we potentially build a collection of algorithms together. So thank you, and see you in the next video, or talk to you in the next podcast.